All right, folks, buckle up because Wall Street's buzzing. Bank of America just dropped a bombshell, urging investors to load up on specific stocks before their earnings reports hit. We're talking about some heavy hitters: Nvidia, JD.com, Block, and Toronto-Dominion Bank. But is this a no-brainer buying opportunity or a potential trap? That's what we're diving into today. Don't make a move until you've seen this. First up, the AI king, Nvidia. Bank of America is practically shouting from the rooftops, reaffirming Nvidia as their top pick in the chip sector. They're calling it compelling, and they're clearly betting big on CEO Jensen Huang's ability to keep delivering those knockout results. But let's be honest, Nvidia's been on a rocket ship. Can it really keep going up? We'll dissect the reasons behind Buffett's confidence and the potential pitfalls ahead. Bank of America isn't just casually mentioning Nvidia. They are recommitting to it. This isn't some lukewarm endorsement. This is a full-throated backing. They see Nvidia's valuation as attractive, even after its massive run. They're betting on future growth in AI, data centers, and gaming. But remember, past performance is no guarantee of future returns. We need to dig deeper than just the headlines. Next, let's head to China and talk about JD.com. The Chinese e-commerce giant has been facing headwinds, but Bank of America sees a potential turnaround story. They're predicting strong growth and believe the stock is undervalued. But investing in Chinese companies comes with its own set of risks, including regulatory uncertainties. We'll weigh the potential rewards against the inherent dangers. Moving on to the fintech space, we have Block, formerly known as Square. Bank of America believes Block is poised for further growth, despite the intense competition in the payments and financial services sector. They see Block's diverse ecosystem, including Square, Cash App, and Afterpay, as a key advantage. But can Block continue to innovate and stay ahead of the curve? We'll explore the challenges and opportunities facing this fintech giant. Finally, let's look at Toronto-Dominion Bank. TD has been dealing with some regulatory issues, particularly regarding anti-money laundering compliance. Bank of America believes the bank is on the path to recovery and that the stock is currently discounting too much of the downside risk. They are betting on the new CEO to turn things around. But can TD overcome its regulatory hurdles and regain investor confidence? We'll analyze the potential catalyst for a TD rebound. Okay, so what happens immediately after Bank of America makes these recommendations? We're likely to see a surge in buying pressure for these stocks, especially Nvidia. This increased demand could drive up their share prices and boost trading volume. Investor sentiment will likely improve, leading to a more positive outlook for these companies. But remember, these are short-term effects. The real test is how these companies perform in the long run. Let's zoom out. Nvidia's success has a ripple effect. Bank of America's strong endorsement of Nvidia could benefit the entire semiconductor industry. Other chipmakers might see a boost in investor confidence. It's like a rising tide lifting all boats. But remember, not all chipmakers are created equal. Do your homework before investing in the sector as a whole. Similarly, positive sentiment around JD.com could lift other Chinese e-commerce companies, especially those focused on direct sales models. If JD.com thrives, it could signal broader strength in the Chinese economy. But it's crucial to remember the regulatory risks associated with investing in Chinese companies. Always weigh the potential rewards against the risks. If Block performs well, it could signal strength in the broader fintech sector. This could benefit companies in payments, mobile banking, and financial services. The fintech space is constantly evolving, so it's essential to stay informed about the latest trends and innovations. Don't just blindly follow the hype. A successful turnaround for Toronto-Dominion could improve sentiment toward other Canadian banks, particularly those facing regulatory challenges. This could provide a much-needed boost to the Canadian financial system. However, it's important to remember that each bank faces its own unique challenges, so don't assume that TD's success will automatically translate to success for its competitors. Think of it as a butterfly effect. A single analyst recommendation from Bank of America can trigger a chain reaction throughout the market. Increased investment in technology, economic growth in China, financial stability in Canada, increased consumer spending, it's all interconnected. But remember, this effect can be positive or negative. We need to be prepared for both scenarios. Now, let's talk about risks. Don't get blinded by the hype. With Nvidia, there's the risk of a Blackwell product transition. Transitions to new technologies can be bumpy. There's also the ongoing issue of China restrictions, which could significantly impact Nvidia's revenue. And let's not forget about competition. The semiconductor industry is a dogfight. The article even mentions that DeepSeek isn't making a shallow mark on hyperscalers' capex plans so far. This suggests that Nvidia could face new threats from innovative competitors. Don't assume Nvidia's dominance is guaranteed. Stay vigilant and monitor the competitive landscape. For Toronto-Dominion, the biggest risk is ethical and regulatory. They face scrutiny for anti-money laundering failures. This could lead to future penalties and reputational damage. While Bank of America is optimistic about the new CEO, leadership transitions are always uncertain. Can the new CEO really fix the AML issues? That's the million-dollar question. JD.com faces the ever-present risk of Chinese regulatory intervention. Companies operating in China are subject to rules that can change quickly and unexpectedly. This can significantly impact their business. Always be aware of the geopolitical risks when investing in Chinese companies. Block operates in a highly competitive fintech space. There's a risk of market saturation and increased competition from both established players and new startups. Can Block continue to innovate and stay ahead of the curve? That's the challenge they face. Bank of America believes Block's growth and profitability are underappreciated. But what if they're overvalued? What if the market is already pricing in too much future growth? This is a critical question to ask before investing in Block. And finally, don't forget about the general market risks. We're talking about market volatility, rising interest rates, inflation, and geopolitical events. These factors can affect all stocks, regardless of how good a company's fundamentals are. Be prepared for the unexpected. Let's be crystal clear. This analysis is based on Bank of America's analysts' opinions. They can be wrong. Their recommendations may be influenced by their firm's relationships with the companies. Don't blindly follow their advice. Do your own research. Remember, this is all based on projections and expectations about future performance. These are inherently uncertain. The stock market is unpredictable. What seems like a sure thing today can quickly turn into a disaster tomorrow. So, should you rush out and buy Nvidia, JD.com, Block, and Toronto-Dominion Bank? Bank of America thinks so. But as savvy investors, we need to be cautious, informed, and prepared for anything. Weigh the potential rewards against the inherent risks. Do your own due diligence. And never invest more than you can afford to lose. The stock market can be a powerful tool for wealth creation, but it's also a dangerous game. Play it smart, and you might just come out on top. Now, I want to hear from you. Are you buying these stocks? Are you selling? What are your thoughts on Bank of America's recommendations? Let me know in the comments below. And don't forget to like and subscribe for more in-depth stock analysis and market insights. Stay informed, stay safe, and happy investing.